Time for Mike on the Money. Big week for the markets. Lots of fresh data to digest in the coming days. Mike Giordano, financial advisor with Williams Wealth Management, is here to share advice. Now, 2022 was not a fun year for investors, but a good year to buy.
Right.
2023, what's it look like?
Well, we don't know yet, but it's so data dependent, and we're going to get a lot of data, as you just mentioned, here in the next couple of days. Two big factors are really hanging on the markets right now. It's inflation and it's corporate earnings, and we've gotten two positive earnings numbers or inflation numbers over the last 2 months. We're going to see if that trend holds again tomorrow morning. If it does, that's a good positive sign for the markets. Then corporate earnings start coming out on Friday with the banks. Over the next several weeks of earnings season, we're going to start seeing what companies say they did in the fourth quarter a little bit. But really what we care about is what they say for 2023. And the more inflation come off, the less the Fed may have to hike. And that's more positive news in terms of corporate earnings going forward.
Yeah. Now let's talk about investing more broadly. You say the best time to invest is often when it doesn't feel good. Why?
That's right. Well, investing is a social science, and over the long term of the markets, they go higher. But because of that social exercise, people get fearful from time to time. And when people are fearful, they start selling. So if you have a long-term horizon, you're able to look past the current fears, you can take advantage of buying shares of stock when everybody else is fearful. And that generally means that they have a faster chance to go higher.
No, when it dips and you buy, if it comes back up, which
dips, rips.
There you go.
That's the hope.
That's when you make the money. Now, should different types of investors play these markets?
Absolutely. I mean, the longer your time horizon, the better it is. So if you're trying to get your kids involved in investing, which I know you probably are,
absolutely.
Yes, these are great times because investing is kind of a delayed gratification game. But when markets are down significantly, you have chances for that money to make money sooner rather than later. And so for the longer you're still going to have thousands and thousands and thousands of dollars that you're going to contribute over the next several years. So you have the ability to be more aggressive. Those people that are near retirement or in retirement, they need cash right now. They have to be a little bit more disciplined, focus on risk management more, and not so much trying to chase big gains.
Yeah. Mike, great advice as always. Thank you for joining us.
You bet.